Good morning, everybody. How are you guys? Let's see what we got today. Jobless claims, they're coming down, that's for sure. How long do you think it will take, if ever, for GME to go back to normal? I personally think that GME is going to be gone before it ever comes back to normal. The businesses, unless they find a way and take advantage of all this capital that they have gotten from nothing, that business is complete. I mean, they were pretty much a dying business prior because they didn't do anything to innovate with the video game area. They were still selling hard copy video games or little gift card things that get you a video game. I mean, they were selling devices and stuff, but with Amazon, Walmart, Best Buy, Target, just run the gamut on other businesses. I don't see how GameStop was a true competitor, but I think it looks like Robinhood's the new thing. And the difference about Robinhood is they're not being short squeezed like all these other meme stocks are, because I don't think there was enough time for people to build a short position in them. But it seems like Robinhood's the new thing. And man, my day trading minions crushed it yesterday. I mean, within the first 15 minutes of the market, I had people texting me in the Discord chat just saying like, "Hey, I already made 16% on this thing." It's like, man. And all they did was just follow the rules that I put in place for you. They're pretty easy. When you get over 80%, you have good volume, good engulfing candlestick, you enter. And let's just put it this way. Reed said it best, and I'm going to say it again. The Bid and Ask Nation day trading chat is basically a cheat code like in Grand Theft Auto. You win. All right. Where do I want to start today? Lots of earnings. It was a mess out there. Let's stick on the Robinhood stuff. So this week, the investment platform has gained 100%, making it the new meme stock of Wall Street. But, of course, there's no shorting interest. So, you can't short Hood yet. You can't short Hood yet. I can't short Hood yet. But there are certainly institutions that can. So there is short interest on it. It's just that you and I, as retail investors, cannot short Hood. Actually, in the one account that I have, I probably can short Hood. I will not, but I probably can. I just thought of that right now. Robinhood is one of the most mentioned on Reddit. So if you want to go on Wall Street Bets and bet your little heart out, have fun. The upward stock price pressure on Hood is not a short squeeze for the simple reason that there hasn't been enough. Okay, so I already saw that this morning. So yesterday, as we saw with Hood, let's see here. This is what we had. We had nothing, and then this insane run up and basically doubling in the price. Yeah. But even with yesterday, so if you're an experienced trader, I had experienced traders trade this candlestick right here. But if you're not experienced, you can't do something like that. Even this little run right here, it really didn't give you much. All the movement was pre-market or in the first basically 15 minutes of the day. So not ideal, but it happened. All right. I guess we could do jobless claims too. So jobless claims, I don't really care about this number. I care about the number that's coming out tomorrow, which is the unemployment number and the non-farm payrolls. Initial unemployment claims this week, 385,000 versus 383,000 expected. More importantly, in my opinion, is the continuing claims are falling off pretty hard right now. 2.93 million versus 3.255 million. So things are getting better, I guess. We're going to see tomorrow. But I just keep going back to it. These people on television were just obsessed with the fact that we were going to get 1 million jobs created in the month of April, and we ain't even close to that anymore. So inflation is here to stay, says a financial advisor. Now, I bash financial advisors nonstop, but this guy, Chris Payne of Payne Capital Management, I mean, he basically, I was like reading an article that I would have wrote, except it's probably better worded. The upward movement we're seeing in prices is not transitory, and big tech will suffer from it. I told you a million times, big tech should not lead markets. That's basically what he's saying here. Wages are going up, and typically what happens is they just don't go down over time. If you're not going to give somebody $20 an hour and then in 6 months be like, well, inflation's transitory, so I'm taking you down to 15 hour. It ain't working that way. So they don't temporarily go up and go back down. Big tech is going to face the biggest headwind. Big tech led this market up. Big tech is going to lead this market down. So if you're in big tech, hold on for dear life. Next, I want to talk about this Credit Suisse article. So I finally figured, I didn't finally figure it out. I actually took the time to read it. Look at this. So this is about the Archegos deal that happened, 3 or 4 months ago, but this is from July 29th. So Credit Suisse knew about this Archegos deal. And for those of you that don't know or don't remember, this was the deal that crashed Viacom and Discovery and some other companies, but those were the two notable ones. They got let's call it a $30 billion margin call. But if you really look back into the history of it, this whole thing was sketchy. So Credit Suisse was the big bank that was accountable for Archegos capital management. And they knew about the issues that were happening. And they didn't do anything about it. So the report released on Thursday, this was last Thursday, prepared by a law firm of Credit Suisse, detailed how the bank for years granted Archegos special dispensation to avoid the rules meant to protect the bank. It also ignored staff warnings for before the family office's firm collapsed. Credit Suisse lost more than $10 billion in trades that day. The business was focused on, this is Archegos, they were focused on maximizing short-term profits and failed to rein in, indeed, enable Archegos voracious risk-taking. So they were looking for quick wins on a ton of margin. And I guess they did it for a while, but not really. Even if you start looking back, where were we here? Dun, 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 dun. So okay. There's an interesting part of this article. Here we go. The report details Credit Suisse's long history with Mr. Wang, who was leading the fund, stretching back to his days running a hedge fund called Tiger Asia Management in 2003. Credit Suisse stuck with Mr. Wang after Tiger Asia settled insider trading allegations and Security and Exchange Commissions pled guilty to federal wire charges in 2012. So this guy's been bad news for a very long time. In 2017, Credit Suisse began waiving risk protection related issues to Mr. Wang before Archegos collapsed. In 2017, and Mr. Wang's trading prompted 10% margin call. So this is common, I guess, by the banks. But then in 2019, Archegos asked to lower its margin requirement, saying its competitors were offering a better deal. One type of potential exposure or maximum the bank was likely to lose if the markets went against Archegos was set to $20 million. In April of 2020, it was more than $200 million, and by August, it swelled to $530 million. Risk managers ignored the warning, figuring the changes in the bank was methodology implemented earlier in the year had thrown off the calculation. This is crazy. This is crazy. This is nuts. What am I saying? The guy's name wrong? How do you spell it? Wang. It's like Jay Wang, the guy that makes all the funny clips of me. Anyways, this whole thing was just a disaster. I think it's pretty entertaining. But the sad thing is it's going to come from all this more regulation, which is unfortunate, but it is what it is. So AMD. Let's look at AMD. I want to look at the chart for AMD because we've had just insane run-ups. People have definitely capitalized here. So this has been the chart on AMD, and even I told you guys yesterday, this is a flagpole pattern. Let me go here and do a line chart. This is a flagpole pattern. So I always say that you guys want W formations going up. Let's make it a little more like this. You want W formations climbing, because you want to be making higher lows. This basically has no higher lows. This is a flagpole pattern, and flagpoles eventually fall apart and come right back down. So that's what's going to happen with AMD. Mark my words. If you've caught this run, congrats, but be smart. Every single day this thing moves to the top of the candle, it pulls right back down. Moves to the top of the candle, pulls right back down. This day, it moved to the top, moved to the bottom, and we're starting the day right here. So, guys, I'm telling you, if you have this, you've gotten lucky. I'm not telling you to get out of it. I'm just telling you to take your profits off the table and just be smart about this, because this is an incredible run that you've caught moving upward. Where's this AMD story? So I guess they've rallied 35% in the last 6 or 7 days. They began their run. Okay, so on Tuesday, AMD announced its line of whatever those devices are would be available in Apple's Mac Pro desktop. The addition of the AMD high-powered graphics card is already pricey at $6,000 Mac Pro, and you can move it up to $10,000. So I don't know who's buying $10,000 computers. I know one person in the world who has ever done that, but they were also like a billionaire, so it's cool. Another trail one for AMD shares could be coming is that on Tuesday, the UK said that they may block NVIDIA, their acquisition of this Japanese ARM. I know we read about that earlier in the week, citing national security reasons. So that could be something else that would be an issue. But guys, I'm telling you, just be careful with AMD. Just trust me on these flagpole patterns. They never work out well in the long run. All right, Uber. I know we were looking at this yesterday, so Uber revenue doubles. That's great. I mean, it's not surprising just because it's coming off of a year where who was taking an Uber, and even now in an Uber you have to wear the mask and stuff. So Uber Technologies on Wednesday reported that if it swung, reported that it swung to a profit for its second quarter, and the gross bookings and revenue doubled year over year, but investors still drove the stock price down. Now look at this. Uber's profit was largely due to its investments. Without them, the company lost more than $500 million in the quarter. So they're not making money on their own. They're doing it via acquisition. So let's see. In the second quarter, it added 30% more drivers in June to July. So Uber is already pulling back its driver incentives. You're going to start seeing this when businesses start to fill their roles. They are going to be start pulling back all of these incentives that they're giving you to go to work. Smash the like button for me. The company reported earnings a day after Lyft's results also showed continued pandemic recovery, but there was uncertainty. So it's not just Uber, it's industry-wide. That's why I wanted to highlight that part of the story. Roku. So Rokus are like the coolest devices ever. You can get a Roku for like $25 and just put them all through your house. I certainly do. I thought Apple TV was the greatest thing since sliced bread. Then I bought a Roku because it was $25, and then I bought one for every single TV in my house. Roku delivered better than expected earnings and revenue on Wednesday, but its shares slipped, and it was down 11% the last time I checked. The company posted a quarterly revenue of $645 million, up from $365 million a year earlier, which is important because you were in a pandemic and you literally couldn't do anything. So, boom. Roku noted in its investors letter that it more than double monetized video advertising impressions relative to a year ago. Guys, they're doing this while we're not in COVID. I mean, why are people not looking at this that way? The company generated a net income of $73.5 million. The company had 55.1 million active user accounts after the second quarter, up 1.5 million from the first quarter, and shares were off nearly 9%. Not important, and that's that. So this is insane. I mean, is Roku the same as Amazon Fire Stick? Technically, they function similarly. Like they function the same as Apple TV, as Google Chromecast, but the simplicity of a Roku device is just incredible. Great phone app. It's awesome. All right, Etsy. I bring this up for one specific reason. Etsy falls 14%. Etsy was supposed to be the greatest thing since sliced bread, according to one person that is very well known. Etsy fell 14% after hours. Now, with that said, their sales did rise. They did very well, but people are looking forward and worrying. So Etsy said its marketplace got about 11.9 million new and reactivated buyers who hadn't purchased in a year or more. So they are down 14%. Where is my story? July 19th, Jim Cramer on CNBC's Mad Money. I remember people were sending me so many freaking DMs. By the way, you can't DM me anymore in Discord because y'all are driving me crazy. On CNBC's Mad Money, Jim Cramer said that he is very bullish on Etsy stock. He believes that the company has a great product and he wants you to own the stock. So there you go. Minus 14%. How's that CNBC working out for you? All right. Let's see what the markets are doing this morning. Etsy will bounce back overreaction. I totally agree with you. And I have a very interesting experimentation that I'm doing with my ambassadors of the Bid and Ask Nation. We are having some fun with this thing. So I am, I'm super pumped with this list that we're putting together, and I hope it works, and I hope that I can eventually share it with the Bid and Ask Nation, but I have my doubts, but I think it'll still be cool. So it has to do with companies that are gapping down like such. So markets up a touch. I personally don't think that we're going to have a lot of overall market action until the end of the month when the Fed meets for their annual symposium in Jackson Hole. So what's the 10-year doing? Nothing, and nothing on the 3-month. Let's see what earnings we got after the bell. Virgin Galactic, Moderna reported this morning and they're down. I told you this thing was going to pull back based on them being in S&P. Beyond Meat is later today. I can't believe that company's still going. Groupon's still going. Penn National they are doing some kind of $2 billion acquisition that I saw. All right, what do we got tomorrow? Probably not much. Ooh, Ocugen is reporting before the bell tomorrow. The greatest COVID company of all time. DraftKings, Norwegian Cruise, Cinemark, Dominion Energy, AMC Networks, not the meme stock. And that's that. So if you want to join the Bid and Ask Nation, if you want to join the Discord, if you want to join anything like that, $7 a month gets you Discord access. $26 a month gets you Discord and software. $76 a month gets you access to my Discord with the Bid and Ask Nation, the day trading channel, all of these different wonderful things that will make you make money. $76 a month. Of course, you get all the software with that, and you'll actually get some other software when it comes out too. If you want to do a one-on-one session with me, by the way, I failed to mention this earlier. There's a guy, his name is Ryan, and he did the one-on-one session with me last Wednesday. He was, he'll agree with me. His trading was a hot mess. He couldn't do anything. Yesterday, he came in and he said, let's see here. The day before, so what day is today? On Monday, he made 1% on his account. And yesterday, he made 3.5% on his account. And he's said, he's like, yeah, today was incredible. And he's like, it works. That's all I have to say. I don't like pitching myself. It's weird. And I don't like talking about myself. It's weird. But it works. That's it. All right, $10,000 gets you a real estate deal with Paul. 4 hours of his time. And if you're doing a big real estate deal, it's definitely worth it. So let me know what stocks you want to talk about. Somebody tell me what that charity is again. Children's. It's something for children's cancer. I just can't remember the first name. But if you want me to guarantee do your stock right now, send $5. I will do a review of your stock. All that money goes to charity. That's it. All right, send me some stuff. Let's see what we got. Actually, I want to take a look at PayPal. No, not PayPal. I want to look at Clorox real quick. All right, so Clorox, I said, okay, perfect. This is great. So when I like things to settle down, I always say I want it to settle down after a big drop. So this is the gap down. So gap down, great downtrend, and it's just holding at a certain level. So what I would do here is if I can get some engulfing candlesticks and take out the bottom of this wick, which is probably about $159 like that, then I would probably go ahead and go short on this thing. But let's see where support is here, because I have a feeling it probably landed at some support level. So this was a big support level, and that was in March of 2020. So it's right there, but it's actually below it. So your next support level is really down here at 144. And with the forecast that company was giving out, I would not be surprised if they got to that level, because a lot of their business is on the decline. And they said that they are in for a rough road ahead. Pinterest, they took a little smack lately, right? All right. So they're certainly in a downtrend. Same looking chart, below all major moving averages. Same thing. You just got to get down here, make engulfing candlesticks and take out these lows. That's what you can do there. All right. Next. Yep, that's it. That was Ryan. Where's Ryan? And I saw Ryan. It does work. That was Ryan Tolbert. He said it does work. He has been, that made me so happy when he told me that it actually worked. But more credit goes to him. He's the one that actually listened and stuck to the rules. I give you the tools, but if you don't listen to the tools, you're going to end up doing what like 4 people do. They don't listen to the rules, then they unsubscribe and leave the Bid and Ask Nation because they don't think that trading is possible for them. But they just don't have the discipline to follow the rules. All trading is A, following rules and being emotionless. When you learn to be emotionless, you'll be a better investor. That book about what's it called? Richer, Wiser, Happier. every single one of those guys is just some of the most emotionless people. I don't like this person, but I have heard from people that George Soros he was like one of the most incredibly non-emotional people they've ever met when it came to investing. If he screwed up, it was just done. On to the next. Doesn't matter how much money he lost. If he didn't believe in the trade anymore, if he didn't believe in the investment, it was just gone. So yeah. All right. Amgen, they got beat up yesterday. Great shorting opportunity if you get an engulfing candlestick like that. I think the size of the candle has to be at least half of this one. So the size needs to look maybe like that for you to go ahead and put a position on today. So, all right. Yes. And by the way, guys, tomorrow, if you're in the Bid and Ask Nation, you know that tomorrow's wins and losses for the week. So with everything that happened with Robinhood this week and all like Clorox and this and that, I want you guys to send me your wins and losses with that. I'm sure there's going to be a lot of day trading wins and losses. Thank you for that reminder, Nick. All right. What is this SoFi thing? Everybody's talking about this. Is this brand? Guys, what do you want me to do with this? There's like 4 candles here. So when you look at a company like this from a trading aspect, you need to... A chart is an entire book, and I think that 1 year is the entire book. Right now we have, let's call it 25. I'm just going to say 50 days of a book. So 50 out of 365 days, maybe you have 1 chapter. This does nothing for me. We're still writing the book. I'm not investing on a daily or long-term perspective here. If you want to go ahead and use it from a day trading aspect, absolutely, go for it. But this is not an investment that I would get into from a long-term perspective. Guys, smash the like button for me. Let's get this thing going. Yeah, I just got a text. My brother agrees with your comments about Jim Cramer. He told me to tell you. Jim Cramer is one of the most entertaining human beings out there, but goodness gracious, is he a fool. I understand. You got to sell ads, but man, and he is so good for television, but he is just... There was some study that came out. This was like in 2014 or 2015, 2013, something like that. Somebody did an analysis and broke down all of his suggestions that he puts out there on television. And they found that it was between 85 and 90% of what he said went in the wrong direction. The guy's clueless. All right. Guys, send me more stocks. Or else I'm just going to start doing my own. I can easily do my own. Let's look at Micron. That's one I want to look at. All right, so Micron is moving into that 100-day. Good volume. Oh. So, hey, Nick. You're the name that I see right now of my ambassadors. Put this in the watch list channel, please, because this is looking great. If we can break through this 100-day moving average with a nice engulfing candlestick and get this yellow line into the sweet spot, we can for sure make some money on this thing. Let's see here. Okay, so we're going to face resistance right here. Where are we? Right here at just above 84 bucks. But once we get through that, I think we can get a pretty good run to $90 to $97. So Nick, please throw that in there. The other one I want to look at is Camping World. All right, so Camping World, another nice looking stock. Oh my God, look at that volume. Guys, this is volume I'm talking about. This is the volume you used to see in the old days. Oh my, man, I'm getting flashbacks to like 2015 before there was, well, I shouldn't say before there was manipulation. There was manipulation a long time, but before there was insane manipulation where the Fed just drove the market. This is volume that you see when people take interest in a stock, you actually see the volume start moving up. This is great. CWH, Nick, please throw this somewhere and just tag me in it. That's all I need to know, because we did something with this yesterday in the Bid and Ask Nation. And if you're in there, you know what I did. If you're not in there, well, you don't know what I did. Next, Under Armour. Well, you don't know what I did, and you're not going to know what I did. So join the Bid and Ask Nation. Now that's a sale. All right. increasing. I mean, I love this. Good volume coming in. Under Armour is just, they are just a finicky stock. They always go up and down, and they can never choose a direction. Under Armour as a whole, as an entire company, has always confused me. You have Dwayne Johnson, Tom Brady, Bryce Harper, Steph Curry, Lindsey Vonn. Run down the list of the incredible, incredible athletes that they have. And they can't, I mean, they just can't get going. They literally just can't get going. It's incredible. So if you have caught this run on Under Armour based on earnings and you didn't take profits yesterday, I think it would behoove you to take profits today, because I do think this is going to come right back down. Let me show you. Let's pull up a line chart just so I could probably show you a flagpole. Yep. So this is exactly the same thing that we're seeing on AMD. Why can't I get rid of this? It's exactly the same thing we're getting on AMD. Here's your flagpole. Flagpoles come down. They are going to come back to reality. I bet you this thing comes back to just above $22 or $21.60, somewhere in that range. That's exactly what's going to happen. All right. John, stop giving away secrets. All right. LUMN. If this stock has only a couple days, okay, good. Why is everybody talking about this one? This Lumen. Okay, good. Whoever picked this, good job. So we're kind of switching, not really, not even close. Let me preface this. We're not even close to entering this stock from a long-term position. This thing really needs to get up here over into the sweet spot, and that's not going to happen until you probably get into the $14 range. I know you don't want to hear that, but buy high, sell higher works better than buy low, sell high, because buy low, sell high makes no sense. All right. CARR. Carrier. Okay. So this is good. It's a power stock. Let's see how powerful it is. Okay, this is a good power stock. So what a power stock is, your overall 4 major moving averages, making new all-time highs over and over, and you're doing that right now. So yesterday you made a new all-time high, though you pulled back. So if you can get an increase in price like so, over $58, I would say, you can go ahead and enter this. But just keep tight stops in place. You're very, very overbought right now. And the probability of it turning down on you is not, I mean, it's pretty high. So just keep a watch on that. I haven't done Smith & Wesson in a while. They got pretty beat up. Okay, so what do we got here? So this is a clear head and shoulders pattern. Here's your shoulders, and here is your head, and here's your smiley face guy. So this is a head and shoulders pattern. So right after you get a head and shoulders, you typically get a decline in price, and that's what you got. So they're gonna turn up, and they're gonna make another charge. If they can just break over that 25-day moving average, I think you will be you'll do very well. So keep a watch on SWBI. I like that one. Let's do Bristol Myers. That one is near and dear to my heart. All right, Bristol just can't break $70. Can't break $70. If you go back, they just cannot break $70 a share. It is truly incredible how this company can't break $70 a share. They're going to be losing their Revlimid. Well, they're going to lose 20% of their Revlimid patent coming in 2022. They got some good approval from the UK based on their Opdivo drug. So that's great. But I don't know. Revlimid's going to be a big one for, I don't know if it's going to be that big in relative. Revlimid is the one that was keeping Celgene going. All right, so the market's open. If you want to do something with Bristol Myers, you got to add on a new high. I just don't foresee a new high coming in anytime soon. So, all right, guys, it is 9:30. I got to get out of here. I will do one more stock just because I'm in a pretty good mood today. So what do you want? One more stock. One more stock. Opdivo is Ireland. Thank you, Dr. Skoladhi. Dun, 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 dun. JD, Josh Turner, you got it. I hope that Josh Turner is the country singer, because that would be pretty sweet. All right. You're in a downtrend. This is a very difficult short for you to make. A, because you're just holding these moving averages right here and you won't drop below it. And B, because you have this incredible support line right down here. So if you wanted, this is a risky trade, but if you wanted to go short like this, you absolutely could. Just know that when you run into this, what is this, probably $62 level, you're going to get a lot of resistance there. So that's it for today, guys. You guys have a wonderful day. I'll be back tomorrow. Wins and losses for the week. Have a good one.